All right, let's dive into what's happening in 2026 because a totally new kind of world war is kicking off. And this one isn't being fought with tanks and planes, but with currencies, with interest rates, with capital. We're going to break down how this invisible conflict is about to completely shake up how money moves around the world.
And it all starts with this one question, blinking on trading screens everywhere in early 2026. You see, for 2 years, everyone was worried about deflation in China, prices falling. Suddenly, they're on the rise. So is this a real recovery? Or is this the first sign of a desperate government-engineered escape plan? That single question really sets the stage for everything that follows.
To really get a grip on this financial battle, we first have to zoom out and look at the chaotic global backdrop. Because in 2026, the world isn't just dealing with one crisis. It's getting hit with a perfect storm of several, all at once.
Now, these events might seem totally disconnected, but they all funnel into one thing: massive global risk. You've got protests in Tehran, drone strikes in Kyiv, instability is just boiling over everywhere. And with the major powers looking inward, these flashpoints are getting hotter, making everything from shipping oil to getting your Amazon package more expensive and way more unpredictable. The world's policeman has officially clocked out.
So while all these geopolitical fires are burning, another revolution is happening. But this one's a lot quieter. It's taking place in offices all around the world. AI is no longer some sci-fi buzzword. It's a very real, very powerful, disruptive force hitting the white-collar workforce. And we're not just talking about cool new tools. We're talking about a fundamental shift in the value of human work itself.
And right here, this is the human cost. This isn't some academic debate. It's a CEO on the record explaining why he's getting rid of hundreds of jobs. The promise of AI efficiency is translating directly into pink slips, and that's fueling a whole new wave of economic anxiety for millions of people.
Okay, so all this chaos abroad and disruption at home, it leads us to the United States, where the response is a pretty radical, inward-looking strategy. The administration is doubling down on a simple, powerful goal: Fortress America.
And believe me, this isn't just talk. That promise to drain the swamp, it's actually happening in a very real way. The federal workforce has been cut by 10%, dropping it to a decade low. The idea is to make government more efficient, but the result is a huge restructuring of where power lies in the U.S.
But here's the giant paradox. Trump's trade war tariffs, they're actually working to bring down the trade deficit. But in doing so, they've created an enormous new problem. The very countries that used to gobble up U.S. government debt, think China, Japan, they're not buying anymore. In fact, they're selling. And without those buyers, the U.S. Treasury is staring down a catastrophic cash shortage.
And this is the moment where everything flips. Facing the possibility of skyrocketing interest rates and the government not being able to pay its bills, the response isn't caution, it's aggression. The order comes down: break open the nation's financial piggy bank to fund the government directly. Now, this is not your normal quantitative easing, or QE. Usually, the independent central bank, the Fed, is in charge of stuff like this. But here, the Treasury and the White House are calling the shots. It's a direct command to the financial system to create money and buy up government bonds. It's a move that completely blurs the line between government spending and money printing, and it's setting off all kinds of inflation alarms.
And this high-level policy has immediate, painful effects for regular people. As the government basically sucks up all the available money, interest rates on things like car loans and credit cards start to creep up. The cost of funding the national debt trickles all the way down, squeezing families who are already stretched thin. And the sheer scale of the problem is just mind-boggling. A massive $1.5 trillion defense budget is just one piece of a deficit that's spiraling out of control. This is the financial black hole that the smash-the-piggy-bank policy is desperately trying to plug.
All right, let's switch gears. While America is printing money to deal with its debt problem, China is facing its own massive crisis, and its response is just as bold, but it's a totally different kind of counterattack.
Remember those rising prices in China we mentioned at the start? Yeah, that was no accident. It's the result of a deliberate state-run policy called reflation engineering. It's a calculated strategy to create a little bit of inflation on purpose, just enough to push up asset prices and shrink the real value of their mountain of domestic debt. It's a pretty clever, if risky, move.
Think of it like a giant seesaw. For years, when prices in China were falling, all the money piled onto the safe side of the seesaw, government bonds. But now, with the government intentionally creating inflation, those bonds are a losing bet. Their value is getting eaten away.
So all that capital is rushing off that side of the seesaw and piling onto the other side, the stock market and the Chinese yuan itself, looking for better returns. And this is the exact point where our two stories crash into each other. You've got the US desperately trying to trap dollars at home, while China is trying to make its own currency and stocks so attractive that global money comes flooding in. And just like that, a direct head-to-head global competition for capital has begun. And here's the first piece of hard evidence that this war is underway. The Chinese yuan suddenly surges against the Taiwanese dollar. Now that's not just a normal market wiggle, it's a signal. It's like a financial gravity well is forming around China, and it's starting to pull in cash from all its neighbors. So why is the money moving? Well, the logic is simple and pretty brutal. Money is pragmatic, it goes where it's treated best. Right now, Taiwanese stocks look expensive, trading at 25 times what they earn in a year. Meanwhile, Chinese stocks look incredibly cheap, at just 12 times earnings. If you're a global investor looking for a good deal, the choice is becoming a no-brainer.
And check this out. This is the real kicker. Over the last month, an investor would have actually made more money by just holding Chinese yuan in a bank account than they would have made from the entire Taiwanese stock market. China's strategy is so effective, it's turning its own currency into a must-have asset.
So the bottom line is clear. We're in a brand new reality. The old rules of globalization, they're being torn up and rewritten. Let's break down what this new world of capital warfare actually means for the key players and, for all of us. The new dynamic is pretty stark. You have the USA, whose strategy is effectively robbing the world of dollars, which leads to shortages overseas and inflation back home. Then you have China, which is sucking in gold, pulling in foreign capital to pump up its own asset prices. And then you have places like Taiwan, caught right in the crossfire, basically bleeding capital as a result. So what on earth does this mean for your money? Well, the old investment playbook needs a serious update. First, currency is no longer an afterthought, it's front and center. Second, with governments actively weakening their own money, classic safe havens like gold or even Bitcoin start looking like essential insurance policies. And finally, you're seeing a big shift away from high-tech dream stocks to companies that make tangible, real-world stuff that people always need. Like WD-40. And that really brings us to the core thesis of all this. The global financial game has fundamentally changed. The old race to the bottom, where countries would trash their own currencies to boost exports, that's over. The new war is defensive. It's all about which nation can build the strongest fortress to keep capital from leaving, and maybe even convince others' capital to come visit. So, we'll leave you with this final thought. As the world's great powers turn inward and battle to control the flow of money, it's going to create winners and losers, and not just between countries, but within them. So the big question is, who are the people left footing the bill for this new era of economic nationalism? That's something to think about. Thanks for tuning in.